Hello and welcome to Livewire Buy, Hold, Sell. I'm Ali Selby and today we'll be attempting to break the internet by analysing 3 stocks that are hotter than Kim Kardashian. Unlike the Kardashians, these stocks have been making headlines for all the right reasons, but with their share prices soaring since the beginning of the year, are they now too hot? To find out, we're joined by Anthony Aboud from Perpetual Asset Management and Catherine Althery from Waystone Capital. Okay, first up today we have family tracking app Life360. Its share price has skyrocketed 67% since the beginning of the year. Anthony, I'll start with you. Is it a buy, hold or sell?
I'm going to say sell, controversially. You know, it's a family tracking, some might say stalking app. It's done remarkably well. I mean, it's a freemium business model. It's got over 50 million active monthly users. And so the growth in the revenue has been off the charts. And so I can't fault what it's done. It's now turning a profit at the EBITDA line. Again, you can't fault what they've done, where they've come from. Where I struggle with is on a go-forward basis what the competitive environment is going to look like in 4 or 5 years, whether it's a company we've never heard of or even Apple, for instance. My second issue is the revenue they do generate, and they do generate only a small portion of their monthly users actually pay for it in their circles. It's very hard to work out the churn rate, but our work suggests the churn rate's quite high. It would be, I think the average customer lasts 2.5 years, which means that just in order to stand still, you do need to spend a lot of money on sales and marketing. So I question the ability to get that operational leverage that people need in order to justify the $1 billion valuation.
Okay, 90% of the brokers who cover the stock actually rate it as a buy. Catherine, over to you. Is it a buy, hold or sell?
Look, it's in that speculative bucket for me, so I'm going to sit on the fence and set it as a hold. We don't invest in businesses that aren't profitable, and they are going profitable this year, so it's come back on my radar. But I can't get over the fact that parents can be so paranoid to have to pay for this product. I'm quite happy with my little Find My Phone app on Apple, but I get it, particularly in the United States, with all their gun laws, that if you're a paranoid parent, you wouldn't want it. So there is a need for the company, but I just can't get my head around the valuation in terms of its market cap now is 1.7 billion. So it's pretty amazing. So good luck to them.
Okay, next up we have another tech darling. It's Altium. Its share price has lifted around 22% year to date. Catherine, staying with you, is it a buy, hold or sell?
Look, it's retraced recently. So again, I'm sorry, I'm going to have to sit on the fence on this one, the hold. There is a bit of scepticism because they were a COVID winner with their Octopart business. And also they do have some pretty lofty targets out there for their 2026 revenue numbers, circa sort of 500 million US. The management have executed well, but it's a reasonably expensive product. We are going through a big change with artificial intelligence. You tell me in terms of the PCB designers, where is that industry going to be in 5 years' time? So, good luck to them, but I'm sitting on the fence on this one.
It had a really strong reporting season. Its share price jumped like 25% in one day. Anthony, do you think the stock's now overvalued? Is it a buy, hold or sell?
I've got a hold. Again, this is a really hard one to analyse over the medium term, the 5 year. You speak to a bull on it, they say artificial intelligence is good for it, and you speak to a bear and they say artificial intelligence will result in designers of PCBs being made obsolete. I don't feel I've got much edge on which way that's going to sort of fall. It's not ridiculously expensive. It is profitable. It's not ridiculously expensive if they do meet their 26 targets of 40% EBITDA margins on $500 million US of revenue. And so, that's why it's a hold rather than a buy or a sell for me.
Okay, last up today, we have Carsales. Its share price has soared around 42% since the beginning of the year. Last one for you, Anthony. Is it a buy, hold or sell?
Well, it's not cheap, but relatively speaking to what we've been talking about, it's a buy. What these 3 classifiers, the big boys, is real estate, Seek and Carsales. What I know about Carsales is from a competitive landscape, there's a lot of companies who've tried to knock them off their perch. A lot of car dealerships and big chains which have tried to sort of knock them off their perch and say we don't need to spend as much on leads. Each time Carsales has just managed to continue to power through and really seen off all competitors. The second point I'd make is that is that most of these companies, even real estate and Seek, have reinvested the cash that they've generated into what have been a real mixed bag of international expansion. I think outside of Zhaopin, most have been pretty poor, to be honest, whereas Carsales, it's been okay. I know it's early days for Trader Interactive, but we feel that they are leveraging their skill set to help another classified business overseas. And we do think that one of the areas where Australian companies have been a bit ahead of the curve has been some of these verticals in classifieds. And so, we think that the capital management's been good, or their capital deployment's been good, and their strong market position has been good. It's not cheap, but relative to the other ones we're talking about, it's a buy.
Brokers are pretty bullish on the outlook for this stock, 65% rated as a buy. Last one for you today, Catherine. Is it a buy, hold or sell?
Yeah, it's a buy for us still. We own it. We've owned it for about 18 months and it's performed exceptionally well thanks to great execution from the management team. In Australia, they've seen a change in their competitive landscape, like Anthony was touching on. Gumtree has actually started charging for ads, for car ads. So where would you rather advertise privately? You'd rather advertise with Carsales every day of the week than Gumtree. So they've seen a big shift in volume across. Plus, immigrants coming to this country, the first thing they do is buy a car. So the car market actually here is quite buoyant, believe it or not. Then offshore, as Anthony's suggesting, they've set themselves up this great platform in terms of Trader Interactive in the United States, Webmotors in Brazil and Korea, and they've executed well. They've got both pricing, new products that they can move into these markets, and I think that's setting themselves up for nice double-digit growth. So I'll stick with a positive one on that one.
Okay, we asked our guests to bring along a hot stock they're still buying today. Catherine, what have you brought for us?
Well, it is hot, has been hot, and we own it, and that's Xero. I still think there's legs in this one. It's very early in its penetration story, so it's got roughly 4 million subscribers, but it's across its markets in which it operates, it's about 45 million sub opportunities. So there's plenty of market share to grow in. Plus the product is actually cheap, and it is such a good product. It costs roughly $33 a month for a small business to utilise this product. So for as far as we're concerned, there's plenty of pricing power for that product over the next few years. So you've got this combination of penetration, you've got pricing coming through, you've now got financial discipline in the business because Sukhinder Kasi Singh has come in from February. She said, right, I'm going to operate on a 75% operating margin. And so what we're seeing is great financial discipline coming through. So we're getting that free cash flow. We got 100 million last year. Hopefully we're going to double that this year. So it is looking really good on a 5 to 10 year view.
Okay, your time in the hot seat, Anthony. What's your stock that you're buying right now?
Goodman Group. It is, I don't want to say the buzzword artificial intelligence, but it is the artificial intelligence play of Australia through their data centre. But no, that's what we like. Look, we always like founder-led businesses that we talked about in the past. Again, like all other founder-led businesses, they've gone into the sort of property downturn with a very, very strong balance sheet. But what we like about the management team there is they're opportunistic. They've taken advantage. They basically seen a trend. They're looking at the assets which they've got, and they can see that the demand that you're seeing for data and data centres specifically. And they've got something which could actually contribute to that. If you've got access to power and the property that they've got, there will be an ability for them to develop those. And whether they do it on their own balance sheet, how far down they actually develop is unknown. How they get the asset from an existing fund to a new fund, again, unknown. Whether or not they go through just build and give it to one of the hyper players, again, you don't know, or they go all the way down to even operation. I don't think they'll go that far, but there's a lot of unknowns about that. But it's about 30% of their work in progress. What for me, it means that their growth profile, as far as both development and growth of FUM, I think it's got a good 5, 6, 7, 8 year profile. We feel is a nice place for them to be. And so, yeah, it's hot, but we think there's a fair bit more to go.
Okay, well, I hope you enjoyed that hot episode of Buy, Hold, Sell as much as I did. Thank you to Catherine and Anthony for your insights today. Remember to subscribe to our YouTube channel and don't forget to give this episode a like.